What's up, everyone? I hope you are having a fantastic day. To get us started in today's video, we've got a tweet by 801 XRP, Michael Barr, on the turmoil in the crypto sector. I just want to be clear. It's important for us not to set up a regulatory environment that stifles innovation. Innovation is critical to the financial sector. It's critical to the economy.
Outside the banking sector, I have to ask you about the turmoil in the crypto sector. What's your view on that vis-a-vis financial regulation on everything we've been seeing happening?
Well, I think, Michael, it's a pretty good example of what happens when you have firms that are trying to set themselves up to avoid a regulatory structure. You know, we have very well-established rules for exchanges. We have well-established rules for custody. We have well-established rules with respect to anti-fraud measures. We have rules about lending out customer funds or using customer funds. So, you know, if we had a regulatory system that was applying fully at full force to that sector, I think that, you know, we would have had the ability to minimize some of those risks that we saw. Now, thankfully, the risks to the core of the financial system have been pretty muted in the aggregate. There aren't today tight linkages between the financial sector and the crypto sector at a very large level. We have some small sets of interactions with the traditional banking system where there might be risks, but not at a broad scale. And so I think it's really important as we go forward in thinking about regulation of crypto-related assets and activities that we think about those risks. I also want to be clear at the same time, Michael, it's important for us not to set up a regulatory environment that stifles innovation. Innovation is really critical to the financial sector. It's critical to the American economy. It's one of the reasons we have an amazingly vibrant economic system, is because we permit, encourage, allow that kind of innovation. And so we've got to get the balance right. We have to have really good guardrails so that investors and consumers are protected, so that the safety and soundness of the financial system is protected. And then we need to let innovation flourish within those guardrails so that we don't lock in old technology.
As always, welcome back to Money Side, your favorite crypto news channel. If you're new here, welcome to the XRP Army. Hit that subscribe button and turn on notifications. That way you don't miss out on our daily crypto news updates. In more interesting news today, we've got a tweet from Rule XRP, the managing director of Valhil Capital, gives us insight into what the price of XRP could be after regulatory clarity. Where does Jimmy Vallee of Valhil Capital see the digital space taking us in the next 6 to 12 months? Keep on watching to find out more.
What do the next 6 months, year or so bring for Valhil Capital and the digital space?
Well, you know, we're going in the short term. There's more fallout to the crypto contagion is going to continue to sweep, and we believe it's a canary in the coal mine for the broader financial system. That this contagion is going to, you know, as you look at, you know, FTX and the FTT tokens and the Serum tokens and all these kind of magic internet money being propped up as assets on balance sheets, that's not all that different from securities being held at the banks right now that are propping up their balance sheets. And we fully expect that will roll through the broader financial markets. Housing has already effectively collapsed. The used car market's collapsed. Inflation's out of control. The Fed's coming out saying they're going to raise interest rates another 50 basis points in the next meeting. So the financial turmoil will continue for at least the next couple of months. We hope that becomes the catalyst for the rise of XRP as this kind of alternative currency, and that it gets, you know, broadly adopted. There's some other more technical things that are going on, like the new ISO 20022 messaging standard that all banks have to get on, which feed into that. There's the Basel III requirement that, you know, bank holdings be actually backed by gold. We think we're going back to, because this is what BRICS and these other currency blocks are starting to do. We're going to go back to some type of an asset-backed currency standard, and at that point, we hope to be one of the leaders in that space, and really taking advantage of leveraging this technology to make life better for everybody.
Moving forward, we have some updates about the Ripple versus SEC lawsuit from James Filan. As we can see from his tweet, the parties have begun to file, under seal, their replies to the oppositions to the motions for summary judgment. The public, redacted versions of the replies are due by Monday, December 5th, but it is possible we might see them sooner. More updates from Squawk, CNBC on SBF and FTX. In the interview, SBF shared, saying that he didn't knowingly commingle funds. He said, "I was frankly surprised by how big Alameda's position was, which points to another failure of oversight on my part and failure to appoint someone to be chiefly in charge of that."
Dealbook Summit yesterday, I spoke for more than an hour with Sam Bankman-Fried, the founder and former CEO of FTX, and I repeatedly asked him about the commingling of funds between FTX and his other company, Alameda.
I didn't knowingly commingle funds. And again, one piece of this, you have the margin trading. You have, customers borrowing from each other. Alameda is one of those. I was frankly surprised by how big Alameda's position was, which points to another failure of oversight on my part, and failure to appoint someone to be chiefly in charge of that. But I wasn't trying to commingle funds.
Here's another one on the SBF and FTX saga. The classic advice is don't say anything. Recede into a hole. That's not who I am, and that's not who I want to be, says SBF on his lawyer's advice. I have a duty to explain what happened. This is an interesting one. Listen in.
And we got into maybe even a bigger question, which is I asked him what his lawyers are telling him right now.
They're very much not. The classic advice, right, is don't say anything. Recede into a hole. And it's not who I am. It's not who I want to be. I think I have a duty to talk to people. I have a duty to explain what happened. And I think I have a duty to do everything I can to try and do what's right. If there is anything I can do to try and help customers out here. And I don't see what good is accomplished by me just sitting locked, in a room pretending the outside world doesn't exist.
You're in the Bahamas right now. Are you in the Bahamas because you think you can't leave?
No, I'm in the Bahamas. I have been in the Bahamas for the last year, and I've been running FTX from the Bahamas. Been running FTX Digital Market, our primary operating entity down here. With Bahamian regulators and others in contact. And right now, I'm looking to be helpful anywhere I can with any of the global entities that that would want my help.
Do you think you could come to the United States or go elsewhere?
I to my knowledge, I could.
Have you thought about doing that?
I've thought about it, and I've seen a lot of the obviously a lot of the hearings that have been happening. I would not be surprised if sometime I am up there talking about what happened to our representatives, or wherever else is most appropriate.
And correct me if I'm wrong, but I think the only reason why SBF is out here talking is either because they already know no one is going to prosecute him, or he'll be pardoned for his woes. Just listening to these conversations, there's no doubt SBF is a train wreck right now. He's just trying to save face, and he will do anything and say anything to make sure of it. Or maybe this is just a distraction from reality. Why else would Sam Bankman-Fried want to speak to the whole world while under investigation? Now that the dust has settled from the interview, it seems clear SBF does not want any blame for FTX's collapse to fall on his parents. Both are Stanford Law School professors, and SBF has said they were influential in shaping his ethical framework. In the interview, he stressed that they bore no responsibility for what happened. All the world's a stage. As always, do your own research and always trade safely, guys. Please keep in mind we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You can let us know always what you think in the comment section below. Let's start a conversation. Thank you so much for watching. Couldn't be here without you. Don't forget to like this video and please click on that subscribe button below. And be sure to turn on notifications. That way you get informed whenever we post our amazing content. Thanks again. We will see you on the next Money Side.